U.S. natural gas futures edged lower to approximately $3.90, following the release of another notable storage drawdown report from the EIA. However, the decline in prices came as the reported withdrawal of 223 billion cubic feet of nat gas for the week ending January 17 fell short of market expectations, which had anticipated a steeper draw of 270 billion. This brought the nation's total natural gas inventories to 2,892 BCF, narrowing the surplus over the 5-year average but not by as much as analysts had hoped. The smaller-than-expected withdrawal underscored a more modest impact of recent cold weather on heating demand than initially projected. Looking ahead, analysts foresee another substantial withdrawal exceeding 300 billion cubic feet for the week ending January 24. Such a draw could potentially eliminate the small remaining surplus in inventories compared to the 5-year average, as colder-than-usual weather conditions have sustained elevated heating demand across key regions. Despite this, the outlook for natural gas demand is expected to shift as weather forecasts indicate a transition to milder temperatures beginning in late January and extending into early February. This anticipated moderation in demand could weigh on prices if it materializes as projected. Adding to market dynamics, natural gas flows to the Freeport LNG export facility are set to rebound from an 11-week low, following disruptions caused by a winter storm earlier in the week. A power issue during the storm had forced the plant to shut down temporarily on Tuesday, but flows are now expected to increase as operations resume. This development may provide some support for prices, as increased LNG exports help alleviate domestic supply pressures. Nonetheless, the interplay of fluctuating demand, weather forecasts, and evolving export trends will likely keep natural gas markets volatile in the near term. Weather data continues to point to conditions that are not quite cold enough to sustain strong natural gas demand in early February. A milder ridge is expected to establish itself over much of the southern and eastern United States, suppressing heating demand across these regions. While frosty conditions persist over the northern Rockies and Plains, they are not widespread or intense enough to offset the broader warming trend. This outlook comes despite the recent frigid temperatures that drove strong heating demand this week, flipping storage surpluses into deficits. However, the market's attention has shifted to the forecasted milder conditions at the start of February, which has dampened bullish sentiment. As a result, natural gas prices faced strong selling pressure to begin the week, as traders reacted to the anticipated easing of demand in the weeks ahead. The combination of technical resistance at $4 and fundamentals creates a critical price point. However, approaching warmer temperatures and the existing storage surplus may cap upside potential. A move below the $3.85 level will open the way to the test of the nearest support level at $3.70. Breaking this support level could signal bearish sentiment, paving the way for a drop toward $3.40 near the 50-day moving average. Please like, subscribe, and comment to support the channel. See you in the next one.